A lot of Airbnb owners in Phoenix are frustrated right now, and honestly, I get it. A lot of people bought properties over the last few years thinking short-term rentals were basically automatic cash flow. They saw massive revenue numbers online, they watched YouTube videos talking about passive income, and they assumed if they bought a decent-looking property in Arizona, the money would just show up. But that's not the market anymore. And here's the important part. That does not mean short-term rentals are dead. What it means is the easy money phase is over. The investors still doing well right now are the ones treating this like a real business instead of a side hustle. And in this video, I want to break down exactly why so many Phoenix Airbnb properties are underperforming in 2026 and what investors should actually be focusing on if they want a property to work today. Because honestly, I think a lot of people are getting bad information right now. There's this weird divide online where people are saying either Airbnb is amazing and everybody should buy one, or short-term rentals are completely dead. And the truth is somewhere in the middle. The market changed. That is reality. Phoenix became way more competitive. Travel patterns have shifted. Operational costs have increased just like everything else. Guest expectations have increased, and a lot of investors never adjusted their strategy. That's really what's happening. The first big mistake I see is people buying properties based on peak season numbers. This happens constantly. Somebody sees a Scottsdale property doing crazy revenue during spring training or peak tourism season, and they assume those numbers are consistent year-round. They're not. Phoenix is a seasonal market. You have to understand the slow months. You have to understand occupancy fluctuations, and you have to analyze the property based on realistic annual performance, not just best 90 days of the year. A lot of investors skip that step, and now they're sitting on properties that looked incredible on paper, but don't actually perform consistently enough to support the numbers they expected. The second major issue is oversupply. There are simply more furnished rentals now than there were a few years ago, and that means guests have options. A basic property with cheap furniture and weak photos doesn't stand out anymore. That used to work. It doesn't now. The operators who are winning are thinking carefully about design, amenities, guest experience, branding, pricing strategies, and operational consistency. And honestly, this is where a lot of self-managing owners struggle because they underestimate how much execution matters. People think Airbnb performance is mostly about the property itself. It's not. A mediocre property with excellent operations can outperform a better property with poor management. That's something most people don't realize until they experience it firsthand. Pricing strategy alone makes a massive difference. If you're not adjusting pricing dynamically based on seasonality, events, booking pace, local competition, and demand shifts, you're probably leaving a lot of money on the table. And then there's guest communication, cleaning coordination, maintenance, review management, turnover timing, supply management, vendor relationships. All of these things affect performance. This is why I always tell investors, you don't just need the right property, you need the right strategy and execution. That's the real game now. Another mistake I'm seeing is investors buying properties without thinking about operational fit. This is huge. Not every property should be a short-term rental. Some properties make way more sense as a midterm rental. Some work better as hybrid models. And some honestly shouldn't be furnished rentals at all. But people get emotionally attached to the idea of Airbnb because they're chasing revenue headlines instead of looking at stability, risk tolerance, and operational reality. For example, a property in one part of Phoenix might crush as a midterm rental for traveling professionals or insurance housing. Meanwhile, another property in Scottsdale may work far better as a true vacation rental. The strategy has to fit the market. And honestly, this is one of the biggest reasons I think investors should be discussing management and operational strategy before they buy, not after. Because by the time someone realizes the property doesn't fit the strategy they wanted it to, they already own it. And now they're trying to force the deal to work. That's an expensive thing. Another thing people underestimate is guest expectations in 2026. Guests are comparing your property against hundreds of other listings instantly. So if your design feels outdated, if your amenities are weak, if your photos are average, if your reviews aren't strong, they're going to feel it. The market is rewarding quality and professionalism now. That's not a bad thing. It just means investors have to operate differently. And honestly, I think this is healthier long term. The people who survive in this environment are building real businesses, not gambling on temporary trends. Now, does that mean short-term rentals can't still perform well in Phoenix? Absolutely not. I still see properties doing extremely well, but the common denominator is strategy. The successful investors are usually doing a few things really well. They bought in the right location. They matched the strategy to the property. They understand seasonality. They treat management seriously. They analyze conservatively, and they focus heavily on guest experience. That's what's working. Not hype, not unrealistic projections, not easy passive income. And honestly, I think a lot of investors are relieved when they hear this. Because if your property has been struggling lately, it doesn't automatically mean you made a horrible investment. Sometimes it means the strategy needs to change. Sometimes the operations need to improve. Sometimes pricing is off. Sometimes the property should pivot towards midterm rentals. Sometimes the furnishing and design need to evolve. But the important thing is understanding what's actually causing the problem instead of panicking because of headlines online. That's why I always tell people, this market rewards operators now. And personally, I think that's a good thing because the investors who approach this strategically still have opportunities here. You just can't approach Phoenix in 2026 the same way people approached it in 2021. Those are two completely different markets. So if you're serious about buying a short-term or midterm rental, or you already own one and it's not performing the way you expected, I don't really believe in random generic calls. I like understanding your goals first, your budget, your target cash flow, your risk tolerance, what type of property you're considering, and what you're actually trying to build. So I've put together a quick intake form below. It takes about 2 minutes. Fill that out, and if it looks like we're a good fit, I'll personally reach out and we can map out a real strategy together. Because today, especially, the difference between a good investment and a stressful one usually comes down to strategy and execution.